Well, it is now time to check in on the latest happenings when it comes to the grain markets. This week, we had the opportunity to visit with Darin Newsom of Darin Newsom Analysis. Here's our conversation that took place on Wednesday afternoon. Let's get to the news of today. Wednesday afternoon, Congress has passed some legislation that has to do potentially with preventing the rail strike. What can you share with our viewers about that?
This is going to be interesting to watch to see how this plays out, because the big concern was what was going to happen if this rail strike actually went through. How are we going to get things moved with, the river system basically down due to low water levels, diesel supplies low. So it was a growing concern. And so, the Biden administration said, look, I understand the union's point of view, but quite frankly, the U.S. economy just simply can't have the rail system going on strike. So, it'll be interesting to see how it plays out. This harkens back to the day, back to the days of FDR and so on. And like I said, we'll see how it works. We'll see if it actually goes through. I still think some agreement can be made between the industry and the unions. It's just going to take some time. And if anything, this should keep things running, as far as grain moving, oil's moving, and energy's moving, and so on. So it'll be interesting to see how it plays out over the coming weeks.
Yeah, no doubt about that. Darin, let's jump into the corn market here. It seems like we're kind of stuck in a sideways pattern. Would you agree with my assessment of that? And what can you share with us about the corn market?
Yeah, corn is comatose for right now. I mean, it has looking at the charts, the March contract has not broken out of its daily range posted on November 15th. Granted, that was a 20-some cent range, but we haven't moved out of that, since, over the last half of the month. So I'm not looking for it to do much of anything. There's no reason for folks to get overly excited about buying at this point or even selling at this point. We've already got, what we really have right here is a stalemate. We've got funds doing a little bit of selling because there's no reason for them to get excited about buying. And we've got the commercial side continuing to buy because we have tight supply. So what's happened is it's just a stalemate. We've got a consolidation going on, just a sideways pattern.
We'll get to soybeans here in a moment, but I want to get to a viewer question on Twitter. Rod asked a question this week. He was asking about, for the Western Corn Belt, what could basis look like in July of 2023? Really have to get your crystal ball out there, don't you?
Yeah, I really do. And as everyone knows, my crystal ball is relatively cracked. But, what we've got going on right now in the basis market is 2022-23 is actually running stronger than what we saw last year by about 20 to 30 cents. Now, if we recall last summer, June, July, we just saw basis explode. Well, if we're going to see that, if we're going to continue to run ahead of or above what we saw last year, we're going to have to see a couple of things happen. One, exports are going to have to pick up. The second half of the marketing year, so from March on, is when we ship most of the corn out of the U.S., and we're going to have to see ethanol demand stay strong. The question is feed demand. If we continue to see cattle placements coming down, feed demand could start to slow the second half of the marketing year. So we may not have the same formula that pushed us to such extreme levels in 2021, 2021-22, but we should still be strong. May not be as strong as last year's basis when we get to next summer, but I'm still looking for basis to be strong.
Okay, Darin, the soy complex had a nice close today at the midweek. What is helping support that right now?
Biggest thing we've got going on right now, again, is strong demand. We have tight supplies. Our available stocks to use. I'll get that number when the cash indexes are calculated Wednesday evening. To post for the monthly updates. But right now we've got tight supplies and we've got strong demand. Exports are going along well. Crush is going along well. So we just have it's helping to support basis. Future spreads are telling us we should be looking for strong supply and demand or bullish supply and demand for most of the 2022-23 marketing year. The real key is what's going to happen with those March, May, July future spreads. That's our best read on South American production, Brazilian production. And right now, those two spreads are still bullish. So still a lot of questions out there about what might come out of Brazil.
Darin, you have your own stocks to use calculation. Of course, you don't love to follow the USDA numbers, but what are you seeing in stocks to use wise?
Yeah, what we've got going on here is the soybean situation has tightened considerably over the month of November. And so again, this reflects the type of exports that we've seen. Again, the type of crush that we've seen. It loosened up ever so slightly in corn. And this is something that we're going to have to watch. Cash market, actually a little lower at the end of November than it was October. So this tells us supply and demand loosened up a little bit. I don't see it as a huge warning sign right now. Again, basis is 20 cents stronger than it was last year at this time, but certainly something that we're going to have to watch. And wheat, we saw a considerable loosening of supply and demand. Cash markets are much lower than they were at this time last month, with the end of last month. So again, there's a concern in the wheat. We just have simply too many supplies right now to meet demand.
Yeah, Darin, want to get to another viewer question before we run out of time today. This one about the wheat market. They noted, a viewer wrote in, and he noted that he thought the wheat market was a bit undervalued and asked if you saw potential upside as we move through these winter months.
Yeah, I think we could. Seasonally, the Kansas City or the hard red winter wheat cash market gains about 10% over those winter quarters. So say from Dec through February. But the problem is that we've got this year is an extremely bearish supply and demand situation in Chicago soft red winter. We had the Dec March, almost pushing 90% calculated full commercial carry when Dec went into delivery. And so what I'm expecting is to see the March, May kind of follow that same path, move into the bearish territory. As far as reflecting bearish supply and demand. So that's going to keep a lid on the type of rally we could see. Yeah, if we start to see some demand pick up, if we start to see the world get interested in U.S. supplies, that could change things. But right now, we don't have the demand for the supplies that we do have on hand. And again, that might limit the buying interest over the winter.
Darin, final word is yours this week. What would you like to leave us with?
Yeah, there's so much going on. I know this is usually a quiet time of year, but there's a lot going on that we have to keep an eye on. From the problems going on in Russia and Ukraine, the rail strike here possibly in the U.S. It's all going to come down to how we get through this winter with the supplies that we have on hand, and if we can see some demand pick up in some of these key grain markets.
Darin, thanks for your time this week.
Appreciate it, guys. Again, appreciate you having me on again.